Thank you for joining me. I'm Alex, and I want to talk about Netflix today. So, what they do is everyone knows what they do streaming video of literally all kinds. Current price is $366, which gives them a market cap of $161 billion. Dividend is zero, and I don't expect that to change anytime soon. Although you would think that it might. But in the next few years, I would really not count on it. Revenue is $20 billion, earnings $1.9 billion, and as you can see, everything's going up significantly. And PE of 89 with a forward PE of 44 means they kind of expect earnings to double within the next year, which I guess... The current earnings are 10% of revenue, which isn't that high, but if they're growing revenue by 30%, they would need to increase their margin by 15%, something like that. So obviously there's a bit of a question there on whether or not they can actually double their earnings. Although it's possible, and I wouldn't doubt them at this point. Total assets $34 billion, total liabilities $26 billion, which give them total stockholders' equity of $7.6 billion, and again, everything is going up significantly. And in short, the risk factors, as everyone else has already said, Disney Plus, Apple Plus, HBO Max, Hulu, Vudu, NBC something. I mean, all the major players are launching streaming services because it's easy, and I assume that most of them will find out sooner or later that it's easy to create the platform. It's not really that easy to make money with it. Although a lot of people have advantages that Netflix did not have in the beginning, which is they already own content that they could monetize easily. And things like Disney Plus, they don't really need to make money on their streaming service. They have enough money from other business to create content and make a loss on Disney Plus while paying for their movies and shows and everything from the budget that was already financing the movies and shows and everything. So, huge advantage for Disney there, obviously huge disadvantage for Netflix, although Netflix has been already building out their library, so there is quite a significant number of TV shows and movies that Netflix has produced themselves and that they own the rights to. So they've done things over the past few years that were really good. So there aren't really many other risk factors to consider at this point. I would think it's unlikely that they're going to try to abolish net neutrality again, which technically did get abolished, but difficult issue, different issue, and I don't think that the providers are really going to basically blackmail Netflix into giving them more money, but could happen. It is a risk factor, so here we are. Beyond that, I don't think anything has changed much in the past few years, and I don't think that things are changing much in the next few years. So it seems like Netflix, for now, is still going to be hugely profitable, but I think that as more and more players are entering the streaming market, eventually there has to be a consolidation with streaming providers going out of business, because the vast majority of people are not going to pay for 5 different streaming services. Even if it were cheaper than the previous cable bill, which is likely, but Still, I don't think that people are inclined to pay for 5 different streaming services because it's 5 different companies that they would have to pay. So I would say that Netflix is going to be around in one form or another. I would not say the same about many of the others. It's possible that Netflix is going to buy one here and there, or maybe merge with one. And if that happens, we will see either way, but we will see a consolidation that will leave a lot of the big players. I assume Disney is going to be around. I assume Netflix is going to be around. I assume HBO is going to be around in one form or another. I'm not sure about Hulu, Apple, any of the others that I couldn't really name, even though many of them exist. So for that reason, I think that Netflix at this point is a reasonably safe stock, and the PE is coming down so significantly that I would say this is almost a buy at this point. I'm not sure if it's a buy because people are scared about the Apples and the Disneys entering the market, or if it's a buy because their earnings have caught up to the stock price. But either way, as a growth stock, I think that you can almost justify buying the stock at this point. Obviously, you should do your own research and make your own decisions, but a growth rate of 100%, which is projected, is obviously amazing, especially with a revenue of $20 billion. And so I would say that a small speculative investment is justified here. And I could see myself buying a tiny amount of this stock. I don't think I would let it get past 5% of my portfolio, especially at this stock price. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.